Hello, guys. Good morning, good evening, or good afternoon, depending on where you are watching this. Welcome to the inaugural webinar, or whatever you may call it. It's a live session where we are going to be talking trading, we are going to be talking strategy, we are going to be reviewing accounts live. So, hello to everyone who is on the stream. Hello, Naim. Hello, Syed. Hello, Janat. Hello, Trader. Nice having you guys here. I apologize for my voice is a bit crackling. I may have a small case of flu, but nonetheless, this won't stop us from analyzing some accounts and talking some strategy. So, hello, Shabana. So, this episode is entitled Mastering the Art of Trading, Unlocking Your Potential. That's a bit fluffy, but anyway, you get the point. So we will just be taking a look at some accounts, and we are going to take what is valuable for us as traders, put them in our toolbox so that we can use them later on. Hello to Pakistan from Ever Traders. So let's go, and without further ado, check the first account. Meanwhile, guys, feel free to use the chat. Feel free to ask me anything, and most importantly, just tell me where you are in your trading journey, because this is an important starting point for this community, and I would like you guys to share as much of your trading experience with the community, with me. I will try to do the same so that we can all become profitable traders, so that we can profit from the markets. And yes, as you probably see here, we are starting with the end game in mind. So a 200,000K funded account. And let's take a deeper dive into this trader. Maybe we can find some bits of strategy that we missed in the video that I did on YouTube. We will be, I don't know, checking a total of 4 accounts, I think, each one with its own characteristics. And after that, we will just put it all together and see what we can gain from that. Again, feel free to use the chat as I'm rambling away. So this is Ketan's account, and he is funded with the maximum allocation on the site at the moment, so $200,000. The thing that stands up here is the win ratio, but something about this win ratio, or about the concept of win ratio in general, doesn't really suit me, mostly because I don't think is that an important of a benchmark for you as a trader to judge yourself upon. um, what I'm saying is that yeah, it's not bad having 77, 81, 90 win rate. It's awesome, but don't really I don't know how to say, don't really stress too much regarding the win rate, because a 55% win rate using only a 1-to-1 R strategy will render you profits, provided you put in the sample size, you stay disciplined, and you stick to a fixed strategy. We will be talking about that later on in this video. What you should, and I emphasize this, what you should be checking is the profit factor. This is basically the benchmark that you should be judging yourself as a trader. So this basically is a division between your total win and total loss. If it's 1, you are break even, you basically lost commissions. Prop firms are happy, but you are not happy, and you don't want that. And yeah, aiming for a 1.5, 1.3, 2 would be awesome. But this again depends on your strategy and on your propensity to avoid losing trades and to delve into good trades. Now, rambled enough, moving on. Let's see what this trader used to trade. And yes, he traded Dow Jones and he traded gold. Another thing here. Okay, so Trader T asks what happens if the profit factor is lower than 1. Well, as I said, the profit factor is a division between the total win and the total loss. So if that is below 1, that means that your total losses, sorry about that, exceed your total wins. So yeah, most likely failed accounts, or your account will stay in the red. No problem. So each and every of you guys just post questions. I will try to answer as many as possible. So yeah, uh, you're welcome. You're welcome, Trader T. Nice. Love to see that enthusiasm. I was really hoping someone would ask me something. Okay, so going back, I was trying to make a good point right here, and this is the thing. As you can see, this trader, who is obviously a successful one, only trades two pairs, so he doesn't spread himself too thin. And this is what I recommend you guys do as well, because it's I know it can be a bit frustrating only to watch one pair. And yeah, maybe you have 1 or 2 days or 3 days if you are a swing trader and you won't find any setup. And yes, that may be frustrating. That's where your discipline will play in. That's a topic for another video. But the thing is, if you are watching too many pairs, most of the pairs, with the small exceptions, let's say 5 or 6 instruments, aren't interdependent. So you may be getting simultaneous signals which may lead you to a waterfall of losses, or you may be getting contradictory signals. So let's say if you're watching a pair like euro dollar and euro Japanese yen, and you see both of them go up, well, yeah, you then become biased that the euro is strong, but that isn't really the case. So just to keep it simple, for the beginning, please, and I urge you, just focus on one or maximum two pairs. Learn how those pairs move. So learn what, for example, this trader trades Dow Jones. I'm pretty sure he knows how Dow Jones reacts to the US market commencement, how Dow Jones closes, how Dow Jones reacts to, I don't know, weekly highs or weekly lows, because each market has its own propensity to do things. Okay, so Trader T asks, what pairs do I suggest? Not really sure what to tell you, because first of all, this is just a discussion. This is not financial advice by any means. I should have started with that, but again, we are here just to discuss and improve ourselves as traders. What I suggest is you find a pair that moves a lot and has low spreads and low commissions, so that you can delve a bit into its characteristics. The simplest pair to start with, it's euro dollar. It's the one that I trading as well, and it's a pair that's traded worldwide. It has huge liquidity. You won't have slippages that often, and yeah, the market moves a bit. Again, gold is okay, but gold tends to be too reactive to news. So yeah, that you should avoid gold and just stick to euro dollar for a while. Maybe throw in some indices here and there, S&P or Dow Jones. I hope that answers your question. So yeah, guys, what we should take away from this account, as I said, win rate, yeah, it's awesome, but you will see later in the video that it really doesn't matter. And yes, try to filter your entries and the pairs that you are trading as much as you can, at least at the beginning, because you will be getting, again, lots of signals and you don't really want that. Now, let's go to the next account, because we blabbed a lot regarding this one. Again, feel free to use the chat and just tell me, guys, is any of you funded or is any of you in a challenge? Let's start this discussion while I am preparing the next tab here to analyze. Okay, so this one is a different kind of account compared to the previous one. I know win ratio still high, but what you notice here is that the number of trades is highly increased. Now we are going to touch in on another important topic beside percents, numbers, and the pairs traded. And I think this one is probably the most overlooked from what I noticed on instructional videos on YouTube, for example. And that is your availability to trade. And let's say, okay, you have a 9 to 5 job and you get home at 5 o'clock. Depends on where you're at in this globe. Some markets will be open, maybe New York, maybe Europe, maybe Asia. The thing is, you should adjust your time and you should base it mostly on your availability, and you should adjust accordingly your time frame, meaning that If you don't have enough time to trade, to stay in front of the charts, it's okay to adapt and try to develop a 5 minute strategy, maybe a 1 minute strategy, maybe become a scalper. If you don't like that action and you find yourself getting a bit hot-headed and entering way too many trades with a low win rate, and you see your profit factor going down and you see your win ratio going down, then you may switch to a swing type of trading. So you will only check the charts when you are home and available, but that doesn't mean that you have to open a trade. You may set some pending orders. So please, before starting this trading journey, decide this for yourselves. What is your availability and how much are you willing to stay in front of the computer? So you may want to stay 8 hours. That's perfectly fine. You will be crushing it. You will be scoring hundreds of trades per month, and it's awesome. But if you, let's say, have a busy life, have a family, swing trading maybe for you. Again, this is solely up to you. I'm just pointing these things out so that you guys can get a clear path on where you should go. And judging by this number, and judging by the length of these trades, I think that this trader is kind of in between of the things that I presented earlier. So I think that he is a day trader. A day trader means that he doesn't hold trades overnight. And yeah, he may trade on the 1 minute, he may trade on the 15 minutes, 1 hour, 4 hours. I think it's a bit too much. But yeah, you can look into this. As you can see, yes, we have many pairs, but these pairs are all JPY based. Actually, we have only pound JPY and euro JPY. Again, highlighting the thing that I was saying earlier, so don't spread yourself too thin. Another important thing, and this one isn't news for you guys, as for sure, please, sorry, hello Shakib, nice to have you on the stream, man. So what I was saying, take profit and stop loss. I won't delve into this because I don't want to state the obvious. It's good to have them, at least have a stop loss in case, yeah, you may be in front of the computer, but maybe something happens. Maybe there is a piece of news that you aren't aware of and the market suddenly plummets or plunges. Then you don't have anything to do. You don't find the X in your empty platform soon enough and you will get liquidated. So yeah, stop losses, save accounts, please use them. Take profits, not really necessary, depends on your style of trading. You may as well trail your stop loss. You get the gist. Yeah, so again, we started with a trader that only trades two pairs, and he is funded with a 200,000 K account. And now we continued with this trader, 50K balance, only trading two pairs. You can see that the motives still start to overlap, and you can see that they have characteristics in common. Now let's check another, I don't know, another approach to trading, one that I have to say I am not that accustomed to, but I will be trying to do my best. It's nice to have so many people on the stream. Nice to have you guys. Again, feel free to use the chat. Ask me anything. Let's talk some strategy. Yeah, and this is the account that I was talking about. First of all, you see this red patch right here. Well, yeah, win ratio is in the negatives, 48%. But the profit factor is still above 1, which means that our trader is still profitable, still be it on a huge sample size. As you can see, we have over 360 trades here with a profit factor of only 1.1. You are able to score a profit of 10% on your account. So back to where we started this video, don't fuss about the win rate. Keep that profit factor up and just put in the sample size. What is special regarding this, regarding Daniel's account, is the fact that he is a hedge trader. So he basically, this is a style of trading that you maybe want to check more about. Maybe it's a style that suits you. I mentioned scalping earlier, I mentioned day trading, I mentioned swing trading. Well, this is sort of a swing trading combined with day trading, but it has an interesting component, meaning that As you can probably see here from his recent trades, he has a long and a short opened at the same time. So basically this is hedging, open two positions same time, and see basically where the market goes, leave it room to breathe, and once it stabilizes in one direction, you close the losing position in a smallish loss, and then leave your winner go. This is why I just wanted to show you guys this account, because as traders, it's nice to have all the options laid out on the table for you, so that you guys can choose the one that suits you, or can try them out and find the one that suits you. You may notice here that this trader doesn't use take profit and stop loss, and that would be suicidal in case of hedge trading, because you basically would have your screen cluttered with lines, and you won't you it's easily get disoriented, and you basically you can use stop loss once you have only one position running and your profit goes, and you close the previous position. I'm sorry if I'm speaking too fast. Please interrupt me if you have any questions, because the main purpose of these webinars, that are going to be weekly, by the way, is this: to make ourselves better traders, to get funded, and to get that trading satisfaction that we are in for, because yeah, that's the ultimate goal. So yeah, you have hedge trading as well to check. Let's see one more account, and then I am waiting for some questions from you guys, but don't stop right now. Just say whatever pops in your minds. And the last account, let's see what does this account has in store for us. And this is Emra's account. Sorry for the voice, from Turkey. Okay, so Alexander is asking, what risk should we put in one trade when setting the stop loss? Very good question. It depends, as everything in trading. It depends on your propensity to risk. It depends on your tolerance. And most of all, it depends on how well you can take losses. Because there's a thing that I noticed over time: good traders aren't the ones that win money consistently. Good traders are, I mean, good traders come from bad traders that knew how to take losses, that still know how to take losses and still continue. So touching back to your question, what risk should we put in one trade when setting the stop loss? I suggest you starting with a fixed amount, let's say 0.5%, if you are in a prop firm evaluation, and maybe tweak it up to, let's say, 1% or 0.75%. Exceeding 1% may be quite hard on your psyche, so I don't recommend that if you're a beginner, or even if you're intermediate or advanced, because we are human beings and each day is different. We may have some luggage stored in our minds that we're not aware of, and they may hit us when we are less aware. So to answer your question, Alexander, I would suggest starting with a 0.5% risk on each trade. Stick to that. Don't drag that stop loss down, because that's the first instinct that we all have, and go from there. If you're comfortable, increase it up until you find that sweet spot, and go on. Okay, now back to Emra's account, and this is the last account that we are going to take a look at. From the looks of it, Emra is a funded trader with EverTrader and has a 50K account. He managed to score an impressive profit in his first month as a funded trader, so 5K, not bad. Win ratio, somewhere in between, right? We saw 77%, we saw 48%, now we see 59%. And given that this is the last account that we are going to review, I'm going to conclude the win ratio discussion saying to you guys that you shouldn't fuss about it. Don't look at it, brag about it if it's above 75%. If it helps your ego, just do it. Keep that ego in check though. And yeah, don't fuss about it. This is the thing you should be looking at, the profit factor. As you can see, guys, $2,000 lost, 7,000 gained, about 3 profit factor. This is awesome. This is what you guys should be aiming for. Thanks for the feedback, Alexander. I hope this was helpful for you guys. Now, back to the pairs. What we were saying earlier still checks out. You can see dollar, you can see gold. So euro dollar, sorry, and gold. Nothing beside that. Again, what I said previously, don't spread too thin. Use the same risk ratio and use maximum of two pairs. Now, regarding the duration of the trades, I don't really want to emphasize it even more than I previously did. So depends on your lifestyle. So maybe Emra doesn't really have that much time to check his trades. He just opens a trade, sets the stop loss, sets the take profit, and lets it run for, as you can see, 21 hours, 19 hours. This thing depends on you guys. Just don't spread yourselves too thin. Use the stop loss, use the fixed risk ratio, and yeah, you should be good for the moment. Now, please let me know if I rambled a lot, I know, and I don't want to make this kind of a thing which it's only me talking. So, Trader T, how to calculate risk? Well, you have lots of tools to do that. You can use expert advisors and the MetaTrader platform if you are using a firm that provides accounts that work with MetaTrader platform. You can have some sites. If you Google, just Google. I can't post links here, but if you Google position size calculator and just click the first, the second, or the third link, you will get a calculator where you will input your account balance, you will input the amount of risk you want to take, 0.5, 1%, depends, and most importantly, you will input the stop loss on which the risk will be calculated, because the number of lots, as you probably know, varies with the size of the stop loss. So yeah, to answer your question, Trader T, just to Google position size calculator, and it's quite intuitive. You should basically get it from there. Now, yeah, what I was saying. So we covered the win ratio, we covered the profit factor. This is awesome. We also covered some close to mindset aspects that you guys should be aware of. I'm glad you guys are still in the chat, and yeah, just wanted you guys to know that for the inaugural webinar, we are offering a special discount code for you guys. You can see it pop up there in the screen. So discussion aside, if you want to have 10% off on your EverTrader account up to $200,000 in funding, you have the code, the coupon code right there. And if you guys don't have any questions, I would still like to show you something. And this is something that I found quite interesting. I also made a video on YouTube regarding this, but I want to show you guys as well. Just 1 second. Okay, so we are back to where we started, because this is, as I said, start the end game in mind. Yes, Alexander, the evaluation is in two phases. You have to score 5% in 10% in phase one and 5% in phase two in order to get the funded account. Uh, sorry, Jays, it's not up to me. I would give you 20% if you want, but this is the code for now. Maybe in further streams, the discount would be bigger. For now, live 10 for 10% discount. And yes, Alexander, it's a two-phase evaluation. Just 1 second, just to pop the site up for you guys. If you maybe have some questions regarding it, it would maybe it would be helpful for you guys. Yes, so as you can see from the site, these are the accounts. So yeah, max allocation 200k, and max daily loss 10%. Sorry, max loss 10%, max daily loss 5%. What's the average passing rate in prop firm? Okay, so just 1 second. Some user asked a very interesting question. So Mohit, interesting to know this as well. Uh, Not many prop firms make this public. You can assume that it's very low, given the fact that prop firms are basically a win-win combination. That you win and they win. So given this fact, and given the fact that they are still on the market, the passing rate is, I would say, just a ballpark. Don't take it for granted, but I would say is below 15%, mostly because, and this is mostly because of phase two, which is quite interesting, and from my point of view at least, because you would say that you would oh, Trader T says that maybe 3-5% get funded. I would say that's a bit drastic, don't you think? I mean, yeah, maybe, okay. Uh, Add notation. Maybe 3-5% get to their first profit split. I agree with that. I mean, I can confess to you guys that I think I lost two funded accounts since I am trading without getting a profit split. So I just got them and lost them. So I think that the initial percentage goes way down when it comes to the first profit split, because I'm not sure if it basically takes you by surprise. Your whole mindset changes, because when you are in a prop firm, you just aim for that 10%, right? You only look at the account. 10%, if I lose it, be it, I'll just plug in another $200, use the code live 10, and then it's 180. Okay, but once you get funded, now that's the interesting part, because when you see those numbers running in your traders platform, you think of that money as being yours, and then you tend to shell up and basically be way tolerant with the losses. And once your account goes into a profit, just close it. Or maybe you may get trigger shy. Maybe you won't enter as many positions as you would in the challenge, when again you saw it as 1%, 2%, 3%. Once you get funded, it's suddenly $500 in my pocket, 1,000, 1,000 and a half, so on. I hope you guys get this. So if you get funded, and I'm sure you plan to get funded, and I'm sure most of you will get funded, please keep this in mind. So don't get into the funded account with the same mentality as you did in the challenge, because nobody is rushing you to score 10%, 5%. Just score that first tiny profit split, maybe 100, maybe 200. So just get some money back, get the initial feedback, and get that confidence built up, because you are in this for the long run. So you want to keep on going and to keep on scoring profit splits. So yeah, Alexander says that his more advanced trader friend has the same problem. Yeah, exactly. And as I said, I did this as well. So I lost at least two accounts where I got funded, and these are the ones that I remember about from this problem. And this is something that it's not quite highlighted anywhere, but this is, I think, if you want to take a golden nugget from this live stream from today, take this. Once you get funded, please do not keep thinking in percent. That's the easiest way. I mean, you managed to score 10%. It's still you. But when you scored that 10%, you didn't think about the money. You only thought about making good trades and making, let's say, informed decisions. So yeah, guys, take that away, because that's an important thing to take about. Exactly, Trader T. It's all about psychology, and it's actually more about how you can adapt to your own mind. Because yeah, it's easy to get greedy. As I said, we are humans, and when we see these sums, I mean, imagine managing a $200,000 account. 1% means $2,000. That's gazillion of, that's like two, three, four salaries, depending on where you live in this world. It may be half a salary if you're lucky, but then you won't need prop firms. So yeah, back to the point that I was making. Don't think of them as money, think of them as percentages, and you should be okay. Mohit says that lots of new prop firms are coming in the market now, and it's too late to take a prop firm market share, or just not really sure. Not really sure how to answer your question, Mohit. This isn't the topic of uh, of this webinar. So we are talking trading. We are not talking buying shares and stuff like that. Maybe in a different vlog if we if we get it done. So yeah, sorry, man, but I can't really answer your question. But yeah, guys. So again, I will just pop this thing here. If you have any questions, feel free to shoot them in the chat. We will be staying live for 3-5 minutes or so. So yeah, these are the accounts that you are looking at, and again, feel free to ask any questions. Please let me know how this was. Your feedback is important because this is the first thing like this that we do at Evertrader, and we want to know your guys opinion as well. I mean, was it okay? Do you want a different format? Do you want to focus more on some strategy aspects? Do you want to focus more on psychology aspects? We will be covering them in different episodes. Sorry for this as well, but your opinion is important because again, we are here to build a community, and we are here to help each other become better traders, and yeah, pass these challenges that you see on the screen, and get those sweet profit splits. Hello, Fahad. Sorry, mate, I think you nearly missed the webinar, but yeah, no worries. I think you can find it on YouTube. I think it should be recorded. So yeah, Alexander says that he's trying to find a good strategy, or at least some ideas here and there. Perfect. Okay, I will keep that in mind, Alexander. First of all, and this is the ending point of this webinar, strategy wise. Nobody, and I mean nobody, will give you the holy grail online. I don't think it really exists. I mean, I don't think there's a strategy that basically crosses the market without any kind of resistance from it. So what you can do is basically check online, check winning traders, check what they do. As you saw in the previous account reviews that I did during this live stream, that certain things overlap. I mean, you saw that they have close to the same win rate, close to the same win ratio. They trade the mix, the kind of the similar mix of pairs. So yeah, you can take things from each strategy, but you have to make your own strategy, because nobody will come on YouTube or will come on Facebook and just tell you, hey, use the strategy because you will get funded and you will smash the markets. And if you find a guy doing that, well, no, that's not it. But I'm not saying that you shouldn't take things from them, and we will be focusing on this uh, during during the next session from you guys. Okay, so we still have some questions. What makes Evertrader a best choice for new traders who are looking to get funded? Okay, so I will have to make a call to the marketing department to answer this question, but I can answer you from my point of view, because I am a funded trader with Evertrader right now. And yeah, I like the fact that they were very responsive. Even before we started collaborating, they were very responsive regarding their support level, and all my questions got answered in a short time. And again, the pricing is quite competitive, but other than that, you have to make an educated decision. I would recommend Evertrader. Again, if you have any issues with your account, uh, Evertrader is using purple trading, so the spreads are cool. I trade euro US dollar, and they are raw spreads, so one or two ticks ish, depending, maybe five during news time. But yeah, purple trading is a good broker, and again, awesome support. You will find that out by yourselves, I'm sure. And yeah, mostly raw spreads. So if you're a scalper, Evertrader is good. Commissions standard, prop firm wise. You don't have any restrictions in trading news. And feel free to check the site. I think I got some perks for you there, Mohit. Okay, So, if you guys don't have any further questions, it has been an honor for me to have you guys up to this hour and this live video. I hope you took at least a small bit of information that may have helped you. And yeah, without further ado, we will see each other hopefully next Wednesday when we are going to talk another, I don't know, another aspect regarding this trading world. Maybe it will be strategy, maybe it will be psychology. You will be notified in due time. The next live, well, we are trying to make it okay. So the next live will be next Wednesday at the same hour, so 8 p.m. GMT plus free. We are trying to make it a weekly thing. So thanks, guys, for the support. And yeah, please feel free to pitch in on the YouTube videos with comments, with suggestions for the next live session, because as I said, we are here to build a community of awesome traders who can pass challenges. Good luck, Grohel, with your 100K challenge. Go for it, man. I hope I will be able to review your account as a past challenge. Mohit, awesome, man. Thanks for the support. Thanks for the feedback. And yeah, Trader T, nice to have you in the family. Thanks for the nice feedback, guys. And again, I hope this was helpful. And without further ado, see you next Wednesday when we are going to be delving even deeper in some strategy issues or psychology issues. You will get noticed in time. So until then, have a nice week, have a green trading week, and yeah, let's see each other fine. Bye bye.